GM everybody, my name is Justin and I've been in the crypto space since 2017, which makes this my second full market cycle that I've been a part of. In 2018, I saw Bitcoin drop from the high of $19,000 down to about $3,000, and then Ethereum dropped from over $1,000 to literally $80. And so the sentiment that took place back then in 2018 seems to be the same sentiment that people are experiencing right now with the current bear market that we're in. One of the biggest takeaways that I learned from the last cycle was to not stop paying attention and to not stop researching new crypto projects. I made that mistake back in 2018, and as a result, I missed out very much on the bull market that took place in 2020 and in 2021, and I'm keen to not repeat those mistakes again. And so in this YouTube video and hopefully series, I want to share with you the research that I'm doing on various different crypto projects and different protocols. In this video specifically, I'm going to be focusing on WOO Network. And the reason why I wanted to make this video was because as I was doing research on WOO Network, I realized that a lot of the content that I was looking for simply wasn't available, so I figured that I might as well make it myself. So that leads to 5 sections in this video. I'm going to leave timestamps down below, so feel free to skip forward as needed. So let's get started. WOO Network was founded by Kronos Research, which is a quantitative trading firm. The leaders of Kronos are Jack Tan and Mark Pimentel, who you can see on the screen here. And the whole point of this is to say that it is a reputable team and that it's fully doxed. So you're not going to be facing an issue of a rug pull like you would in many other projects. And if you've been in crypto for any amount of time, you know how illiquid the market is. And not just that, but liquidity is fragmented across many different exchanges, which makes an already illiquid asset even more illiquid. And so since Kronos deals with a lot of high volume trading, they experience a lot of slippage and issues involved in their operations. So WOO Network is the solution to a problem of low liquidity in crypto. The way that they solve low liquidity is by offering 2 different products. One that solves an issue of liquidity on the centralized side, and another one that solves an issue of liquidity on the decentralized side. The overall trading volume from when this data was taken in a 24-hour period was $260 million, with 97% of that coming from their centralized product, woox, and the other 3% coming from their decentralized product, woofi. $260 million of trading volume in a 24-hour window is actually quite small, all things considered. If you look at the top competitors, so number 1 would be Binance. Their 24-hour volume was $17.4 billion here, with the next biggest one being OKX at around $1.9 billion. So WOO Network as a whole is quite small. If we were to try to find them, they would be number 36 on the list. So they have a long ways to go to become a major contender in the space. Now I want to talk about what woox is, which is their centralized product. So woox is essentially a liquidity aggregator with a front-end trading platform. Their primary value proposition is that users who want to trade on woox can reduce their trading costs by buying and staking the WOO token. As they buy and stake more WOO, their fees go down and trading fees can be as low as 0. And when I say that they are a liquidity aggregator, what I mean by that is that the liquidity on woox is not done by market makers on the woox platform. woox instead taps into a network of liquidity providers, namely other exchanges, other market makers, and other trading institutions. They're not completely transparent right now as to where their liquidity comes from. I tried talking to some people on the team, and they just did not want to share that information, so that is one thing to consider. One of the subproducts under woox is a product called WOO Trade, and this is where other institutions, namely other centralized exchanges, can tap into WOO's network of deep liquidity and therefore give that liquidity to their users. This also requires WOO to be bought and staked to gain access to WOO Trade. So looking at the sort of WOO ecosystem here, I want to focus on the bottom right. And the bottom right shows these other institutions and partners that are tapping into woox liquidity through the WOO Trade product. There are currently 3 ways that woox accrues value back to the WOO token. The first is that as traders want to reduce their fees down to 0, they need to buy and stake WOO. The second is that centralized exchanges and other institutions through the WOO Trade subproduct, as they want to deepen liquidity for their own traders, they need to buy and stake WOO. And then finally, 50% of all the trading fees across woox and WOO Trade are used to buy back the token on the open market and then burn them. So all 3 of these affect the supply side of WOO. As WOO supply is taken off the market, that in theory should be a supply shock, which should therefore improve the price of the token. Looking at the value accrual through more of a diagram and flowchart, it sort of looks like this. As traders want no fees and increased liquidity, they begin to use the woox platform, and then liquidity attracts traders. Traders attract liquidity in this positive feedback loop, and then as a result, finally staked and burned tokens reduce supply and increase the token price. Now moving on to woofi, which is WOO Network's decentralized product. woofi is a cross-chain DEX that has extremely low swap fees at 0.025%. If you've been in DeFi at all, you've definitely done a swap on like Uniswap or SushiSwap or even maybe Trader Joe. But the industry standard for swap fees is typically 0.3%, which makes woofi extremely competitive in this space. Now the cross-chain capability comes from Layer 0 and the Stargate DEX. This is a very lengthy conversation, maybe one for another video, so I don't want to go too much into detail on what Layer 0 is, but maybe just at a high level, I can say that Layer 0 is a cross-chain communication system that allows for blockchains to communicate with each other. And so this means that woofi doesn't natively sit on any one specific blockchain, but it allows blockchains to communicate, and therefore it allows you to build a cross-chain DEX. And what I thought was interesting about this cross-chain capability on woofi was that in the documentation, they literally don't mention cross-chain utility until May 19th of this year, which means that I don't think that it was their intention to even have cross-chain capabilities when woofi was built. And when you go to Layer 0's website and you look down at their list of investors, you can see that, Kronos is one of their bigger investors. So my thoughts is that, potentially the cross-chain capability for woofi came as an afterthought just based on Kronos's investment into Layer 0. But I do want to show you right now and do a quick demo of what woofi looks like in the cross-chain capabilities. So you can see here that we're on the woofi dashboard, and this over here is the chain that you want to swap your assets from, and down below is the chain that you want to swap your assets to. Currently, Layer 0 is only implemented in EVM compatible blockchains, so you'll see that you can swap between Avalanche, Binance Smart Chain, Phantom Opera, and Polygon. And right now, they don't have too many assets available. There's only 5 right here. But if you wanted to, you could swap, Bitcoin on the Avalanche blockchain for any of these assets on the Binance Smart Chain, or literally any other of these three blockchains over here. When swaps happen through Layer 0, what's going on the back end is that, so for example, if I wanted to swap Bitcoin on Avalanche to Phantom on the Phantom network, what's going on the back end is that Bitcoin is being swapped into USDC on the Avalanche blockchain. That USDC is then being bridged over to Phantom, and then is being swapped again into Phantom on the Phantom network. And the cool thing about using layer 0 is that you only need source gas. So if you've ever used a bridge before and you're bridging, let's say from ETH to Avalanche, you would need ETH as the gas to send your assets to the bridge, and then you would need AVAX on the Avalanche side to redeem your assets from the bridge. But using layer 0, you only need source gas, which makes layer 0 a very powerful cross-chain DEX. And in addition to using the swap function, you can also provide liquidity to earn yield as well. As I mentioned earlier, the way that it works is that your assets get swapped into USDC, and then USDC gets bridged and then swapped into the destination asset. And so this means that you don't really need to have bajillions of different asset liquidity pool pairs like you would for other DEXs. So the cool thing about layer 0 is that all of the liquidity pools are all single asset pools. And you can see that here. The overall yield is quite low. So I don't know if I would necessarily recommend being an LP on woofi right now. Potentially in the future, this could increase. Yep, and you can see here that all the dual asset pools are now being deprecated, and I have a feeling that these remaining ones will be deprecated as well very soon. Okay, woofi is able to offer such low fees because they don't use that typical AMM algorithm that other exchanges use. So if you think about UniV2 and Curve and SushiSwap, they all use the X times Y equals K model to determine price. But instead, woofi developed their own model called the Synthetic Proactive Market Making Algorithm, or SPMM for short. And what this means is that they use an on-chain oracle, and in this case, they're using Chainlink, and it pulls real data from centralized exchanges, and they're able to mimic the order depth of a centralized exchange on their decentralized exchange. So this makes their liquidity much deeper, and therefore they don't need to incentivize user liquidity through high trading fees, and they can pass that discount on to traders. And similar to Woo Trade, woofi also offers a subproduct called woofi Brokers, and this is where other DEXs can route their trades through woofi, and as a result, they get paid half a basis point in rewards paid in stablecoins, which is pretty cool. The woofi Brokers product is relatively popular right now. You can see that some DEXs have already onboarded, like 1inch and Dodo. I mean, like, those are pretty big household names. There are a bunch of other ones that I've never heard of before, like OpenOcean and BitKeep. Like, what even are those? But it is good to see that DEXs are onboarding, and hopefully this trend will continue to improve as people realize that they can really improve the trading experience of their users. woofi accrues value to the Woo token in 3 different ways. The first way is that 80% of transaction fees, this is the 0.025% figure, 80% of this gets used to buy back the token, and then they're given to stakers on the woofi platform. Additionally, 2.5% of all the profits from the single asset vaults that I showed earlier are used to buy back the token and given to stakers as well. And then finally, the Woo Network team is granting 100,000 Woo tokens in rewards to distribute to stakers every single month. And I also created another chart here to show the value accrual. So starting from the left-hand side, low fees from the 0.025 swaps attracts traders, and then trading volume attracts yield farmers who provide liquidity. Yield attracts traders and onboards new brokers in this positive feedback loop, and then as a result, part of the swap fees and vault profits are used to buy back and distribute Woo tokens to stakers. Okay, now moving on to tokenomics. The total market cap of Woo Network and the Woo token is at $178 million. But most importantly, I wanted to call out the circulating, total, and max supply on the right-hand side. So the token started off with a max supply of 3 billion tokens, but you can see right now the total supply is at 2.96 billion. And so the difference here comes from the token and buyback and burn function of woox, where so far woox has been live for about a year, and only 0.1% of all the tokens have been burned thus far. So the reason why is because trading volume right now is relatively low. I showed you earlier that I think WOO network was ranked 36 in terms of trading volume, and so therefore not a lot of trading fees have been accumulated, and therefore not a lot of buybacks and burns have been executed. But as WOO network continually climbs the rank in terms of trading volume and they move the way towards the top, more WOO tokens will be bought back and burned, therefore further reducing the amount of supply on the market and therefore increasing the cost per token. And looking at the token distribution, so the major thing I want to call out here is that the vast majority of tokens are already in circulation at 38.64%, or are being used to build the WOO network through ecosystem rewards at 28%, or the insurance fund, or through WOO Ventures. I mentioned earlier that if you stake on woofi, they allocate 100,000 tokens to stakers. I believe that this number comes from the ecosystem rewards figure shown on your screen here. And also importantly to mention is that a total of 18% of tokens are allocated to investors in the team or are currently being vested, which means that there isn't a lot of space for these early seed investors and team and advisors to dump on the open market, which is good to see. Okay, looking at competitive valuations. The primary competitors to woox are centralized exchanges like Binance and FTX, but specifically centralized exchanges that also offer a token that has value accrual mechanisms similar to woox. So looking at the major exchanges and the top competitors, it's Binance, OKX, FTX, Huobi, and Crypto.com. All 5 of these offer token buyback and burn programs, so it makes them quite comparable to woox. Looking at trading volume, woox is by far the lowest, so there's a ton of room for them to grow, especially once kind of news catches on that they offer low fee and even 0 fee trading. I don't see a way that they cannot become maybe like a top 10 exchange based on their offering. Looking at the valuations, I did some quick math here to compare the 1-month trading volume to market cap and fully diluted market cap. I felt like this was the best way to kind of see value accrual because all of these tokens here offer buyback and burn programs, so trading volume is very integral to the overall price of the underlying token. I do want to kind of call out that the outliers here are BNB from Binance and the Crow token from Crypto.com, and these ones have a significantly higher market cap to volume ratio, and that's because I think the reason why is because Binance, the BNB token is used for the Binance Smart Chain ecosystem, and also the Crow token is used for Crypto.com's blockchain, and so they have utility beyond the buyback and burn. They also have utility as the gas token. But even when you're just comparing the WOO token to OKB and FTT and HT, the WOO token valuation is pretty much aligned, if not undervalued compared to these. I do want to call out the difference between the market cap to volume and the fully diluted value market cap to volume figures that you see here. woox's does look significantly more undervalued when looking at the FDV market cap to volume, and this is because more of the woox tokens are currently in circulation, whereas that's not the case for FTT and also for HT, which means that overall, woox, there's a lot less tokens to be dumped on you on the open market. Now moving on to woofi, the primary competitors to woofi are these singular blockchain dexes like Curve and Uniswap and SushiSwap, and then also these cross-chain dexes like Thorchain and Stargate. And looking at DeFi Llama's top dexes by TVL ranking, obviously the top 2 are Curve and Uniswap, with a combined TVL here of a little under $12 billion. To put that into comparison, woofi's TVL is extremely low at 5.4 million. So it's not anywhere near making it onto this list. But I do want to say that even though woofi's TVL is low, they don't necessarily need a large TVL to compete with these because of the SPMM algorithm that they're using to simulate the deep liquidity of a centralized exchange on their DEX. I also want to point out here that there is a potential for large competition in the cross-chain space. So if you look at the chains that Curve and Uniswap and SushiSwap operate on, for example, Uniswap is already available on Ethereum, on Arbitrum, Polygon, Optimism, etc., etc. SushiSwap is on the most here, you can see. This kind of poses a threat for woofi, where these DEXs that already exist on all these different blockchains, they could relatively easily implement layer 0 and then offer cross-chain swapping capabilities. And along with their TVL, their massive amounts of TVL, they could easily provide more token assets and with deeper liquidity than woofi would be able to. In fact, this is actually already happening as we speak. So on July 21st, SushiSwap tweeted this out, that they built a cross-chain AMM using Stargate and Layer 0, and they're launching on these 7 blockchains: ETH, Arbitrum, Optimism, Phantom, AVAX, Binance Smart Chain, and Polygon. We can even go to the SushiSwap page and you can see that it's up and running. Similar to woofi, you choose the starting chain and then the destination chain, and then you choose which asset you want to swap. Keep in mind that SushiSwap again has so much more TVL than woofi. I think what I showed earlier shows that SushiSwap has a TVL of about $657 million and therefore tons of more trading pairs, which means that they're able to offer these trading pairs already in the cross-chain swapping functionality. And you can see that all the different assets you can swap between. And then compare this to what we saw on woofi that only had maybe 5-6 assets available. You can see that woofi as a whole is much less competitive compared to SushiSwap already. All right, now moving on to concluding thoughts on Woo Network as a whole, starting with woox and then moving on to woofi. So I think that, at least in the short to midterm, that woox's free trading is likely going to revolutionize cryptocurrency trading in the same way that Robinhood and Robinhood's free trading revolutionized traditional finance. If you think back to the space and time before Robinhood, you would have brokerage firms like Scottrade and Charles Schwab and TD Ameritrade who would offer trading at $5 per trade. And Robinhood came in and disrupted the space by offering free trading. And that allowed Robinhood to propel in popularity, and they became increasingly popular with millennials and with Gen Z. Now, this kind of moat that Robinhood had in being able to offer free trading was kind of short-lived. Maybe 2 to 3 years later, Charles Schwab and these other companies kind of caught on and then began offering free trading as well. So I think that while woox does have a competitive moat in terms of fees, I don't know how long this competitive moat would last. Other exchanges could quickly apply zero free trading to stay competitive. And in fact, some exchanges have already begun doing that. So for Binance, their convert function is already free if you're a market taker. Another thing I want to call out is perhaps a misalignment in incentives between the stakers of the Woo token and the users of the woox network. On one hand, buyers and stakers of the token want there to be lots of trading activity and therefore lots of fees created for the buyback and burn of the Woo token. But on the other hand, the woox platform incentivizes free trading, which means that not a lot of tokens will be bought back and burned, which kind of makes this sort of misalignment in incentives. I think the only sort of overlap between these two is from the traders who need to buy and stake WOO in order to access free trading, but there isn't a whole lot of data yet to kind of show what that would look like and how that would move the needle in terms of supply being locked up from people who want to stake it to access free trading. And then moving on to my concluding thoughts on woofi. So I think woofi offers a very, very compelling 0.025 swap fee, and I don't think that other decentralized exchanges can match this, because other DEXs need to keep their fees high to incentivize LPs. But on woofi, they don't need LPs because of their SPMM model, and this gives them a strong competitive advantage. I also think it's important to mention that woofi will be facing increased competition from other DEXs in the cross-chain swap realm. So as I mentioned earlier, protocols like SushiSwap and Stargate have already launched using Layer 0, and I would imagine many other protocols will follow suit. I don't think that this detracts necessarily from woofi because of the low fees that they offer on swaps. So I think it's just a matter of time for woofi to continually build out their Layer 0 DEX platform to be able to roll out across more EVM blockchains, and then also scale the list of tokens that you can swap between these blockchains. And if they were to continue shipping and building, I can definitely see woofi becoming a top DEX in the crypto space. And in terms of overall concluding thoughts on WOO, I would consider WOO to be a crypto infrastructure token because it's creating the infrastructure of cheap trading. And I specifically like infrastructure plays during a bear market because you don't need to necessarily bet on any one specific project to outperform. Instead, if the entire market ends up moving upwards and we get out of this bear market, I think infrastructure projects and tokens would move upwards along with that entire movement. And so therefore, you don't need to bet on any single project, but on the market as a whole. As the market begins to pick back up and we exit this bear market, then trading volume on exchanges should increase. I hope WOO Network as a whole takes up a larger share of overall trading volume, but as that happens, then more fees are generated, more tokens are bought back and burned, more WOO are being given to stakers on woofi, and that kind of creates this overall wheel of value accrual to WOO holders. And looking again at the market cap chart of our kind of 5 major competitors of centralized exchanges against WOO Network, WOO Network obviously has the smallest market cap, but the next highest one is Huobi at a market cap of $730 million. And let's just say that we exit this bear market and we enter another bull. Whether that happens in the next 6 months or 1 year is beyond me. But I don't see a scenario why WOO can't capture a much bigger pool of overall trading volume. With the ability to offer free trading, I think it's just a matter of time until the market and network effects pick up and people begin to realize the value proposition of WOO Network. And so I don't see why in the short to mid-term why WOO Network would not be able to flip Huobi. I think it's just a matter of time until it increases in market cap to overtake it. Now, I don't think that WOO Network could get to the $3 billion range in where, Kronos and FTX and OKB are at right now. I think that might be a longer term horizon for them to be able to increase their market cap to that level. But I think in the short to mid-term, it's definitely possible for WOO Network to flip Huobi. I just think that because we're in a bear market right now, there's a lot less trading activity going on and therefore less interest in maybe trading partners and exchanges like WOO Network. But once we enter a bull, I would definitely be looking at WOO Network to flip Huobi in market cap. And finally, if you are planning on investing in the WOO token, it's actually really easy to look at the health of WOO Network. Their business model is pretty straightforward. And so all you need to do is go to woostats.io, and I'll just show you on their webpage. And if you just scroll down to this middle section here, you really only need to follow these two charts. And as long as the chart is going up and to the right, then the health of the network is good. It means that WOO Network is taking up an increasingly larger percent of overall trading volume, which should be good for value accrual back to WOO token holders. If this chart is going down, it means that less people are using WOO Network and they're using other competitors instead, which is a bad thing. Right now the volume's been kind of trending downwards, and that's because we're in this bear market. So the data here, I would assume that when we're in a bear market, people are more likely to trade with easy off-ramps to fiat currency, which woox does not currently offer. So they would potentially fade woox and begin using Binance and FTX and Coinbase that has easy off-ramps. But when the bull market picks back up again, make sure to keep an eye on this chart to make sure that it's going up and to the right. I think it's just a matter of time for zero fee trading to catch on. But again, I don't know how long that competitive mode will last, because other people like Binance and FTX could quickly begin lowering their fees to zero as well. That pretty much wraps up my thoughts on WOO Network. I do want to say that they have an interesting path ahead of them. By being able to offer zero fees, that's massive and huge value to traders, and I can see people moving into woox in droves. However, I do think that WOO Network needs to get the word out through whatever marketing channels that they're using. And I've checked their Facebook. They're not running any ads on Facebook. I did see that they were doing some stuff with Google, but I haven't personally seen any of the ads that they've been running. They do also offer this sort of referral bonus where if you refer people, you can also make a portion of their trading fees. So that can lead to some sort of organic growth. But we definitely need to see WOO Network really step it up in terms of adoption by being able to capture a larger share of total trading volume. As of right now, WOO Network only makes up about 0.2% of the entire crypto trading volume, which is very, very low, and we definitely need to see this number increase dramatically for there to be strong value accrual mechanisms to the WOO token. And so hopefully, their marketing initiatives kick in, that their referral bonuses kick in, and that their traffic definitely increases. I don't know if it'll happen during this bear market because there's just a lot less trading volume happening in the crypto space. And as I mentioned, during a bear market, people need to have off-ramps to fiat currency, and currently woox does not offer that. So that's why I think we've been seeing this trend downwards in terms of overall market volume, where people would rather trade on a Binance or an FTX or a Coinbase, where they can easily sell their crypto into fiat cash and then cash out of the crypto space as a whole. But once we see the bear market end and the bull market come back in full swing, we should definitely see an increase in trading volume here. So I hope you guys found this video useful. Please give it a thumbs up if you did, and I will see you in the next one. Cheers!